It's about faith. Mm, mm, mm. It's about trust. Mm, mm, mm. Nothing can come. Nothing can come between us. Don't mind my singing. I just like to get in the rhythm. You know what I mean? Anyways, how you doing, class? How's everything going? Hope you had a wonderful Thanksgiving weekend. Hope everyone was safe, ate a lot of food. Now it's a new week. Let's dive into the example here, where we're going to be talking about how to pay off your mortgage doing velocity banking. We're going to do velocity banking on your mortgage. Specific, detailed, everything you need to know before you get started. So in this scenario, I'm working with a gentleman, police officer. So I want to shout out all the police officers all throughout the United States. Thank you for serving us in the communities. Now it's time that we serve you. Okay? So I want to do my part in serving the police department. And who knows, maybe one day a sheriff or one of the top dogs says, listen, Denzel, need you to come over to my department, teach my guys about this velocity banking thing. Okay, I know my guys got a lot of mortgages and the stress is up to here. It's up to here. Let's make sure we're helping our police department out. Okay, so we have a tier 3 contributor. Okay, and I just want to break down some specific things so that you guys can really get to know your mortgage even more, right? Because listen, I'm never gonna get one of these, but my parents out there, okay, mom, dad, listen, we got to get rid of this thing. Did you know that a mortgage means a dead pledge? It's a dead pledge. Why are you making a dead pledge? Matter of fact, why are you refinancing that dead pledge? Can you stop refinancing, please? The thing is, it's hurting my heart every time I got people emailing me, oh my God, I refinanced because of this and because of that. No, you refinanced because you were misinformed, uneducated, and you made an ill-advised decision. You didn't think it through. You didn't do the math. Okay? So now you're going to pay for that, and now you're going to work with me. Okay? You're going to stop delaying, stop hesitating, and you're going to work with me. All right? And I'm going to hold you accountable. All right? So let's dive into this mortgage right here. $246,060.50. That is the balance owed on this particular mortgage. Okay, and by the way, this mortgage got refinanced, so I was like up to here. So I'm gonna cut that off. We've got 3.75% amortized over another 29 years. Here's the mortgage payment, $1,657.87. Let's break down your mortgage. Okay, most people, you probably never even looked at this stuff. You just, oh, I can afford it, and pay it. Okay, look, we've got $94 going towards property tax each and every month, 172 PMI each and every month, $230.88 county tax. Okay, so these three expenses right here have nothing to do with the actual balance of your mortgage. This money goes into an escrow account. It sits there, it does nothing, but until the end of the year it pays these things, or it pays it quarterly or monthly, however it works. Okay, the money just sits there, does nothing. Okay, that's very bad. You don't want to do that with money. Now, going to the actual mortgage itself, of this money, right? So already we've got like $400+ that are being eliminated from this total payment right here. Now we've got $770.15 of interest costs. Interest costs. Okay, so that means every time you make a payment in these first beginning years, majority of the payment, look at that, interest. And then this is how much is going towards principal. Okay, so if we were to break down the math, okay, 29 years left, that's 348 months. Times 348 by that, you get this, okay? $576,000, okay? That's double that number, is it not? It's more than double, okay? So that means if this person does nothing but continue to pay this, right, they're gonna pay that. So the question is, how do I get rid of that? How do I pay that down in a very short period of time? All right, so let's break that number down even further. You've got $173,000 just going towards home cost, right? The county tax, the PMI, the property tax. Then you've got $157,000 going towards what? The mortgage lender, okay? So the goal is we want to capture this money right here. We want to capture this, okay? We also want to utilize this money. How do we utilize that money, okay? Let's come over to here on the velocity banking. I thought I'd draw a little picture for you to really dive even deeper into this, okay? So, to go over the velocity banking concept for my new viewers, the idea is that we want to use simple interest debt as leverage to pay off amortized debt, therefore paying off both debts in a third of the time. So if you are looking at your debts overall, your financials, and it's showing it's going to take you 15, 20, 25 years, 30 years to pay off all your debts and become debt free, my goal is to pay off all of that stuff within 5 to 7 years, okay? That's actually a standard number for the velocity banking concept. That's a standard, right? Meaning like it's normal to actually pay off all your debts in 5 to 7 years when you get involved in the velocity banking community. Okay, there's not very many of us channels that are teaching this, right? You've got Con and Jay Wallace, you've got VIP Financial, Replace Your Mortgage, you've got my friend Daniel teaching velocity banking using a calculator, and he goes even further into investing. You have me, okay? I'm brand new, but you have me, and I've got quite a bit of videos for you to really dive deeper into this. So there's not very many of us, okay, teaching this concept because number one, it's very difficult. You know, it's complex. It's not simple, right? And there's a reason for it, right? Only the dedicated, only the committed become successful, right? Pretty simple. So, velocity banking in my little picture here is I make money, right? You and I, we both get a paycheck, okay? 99% of people, everyone in the world, pretty much, has a checking account, okay? You're gonna get paid, okay? When you get that paycheck, it's going to either get cash deposited, right? You go to the check cashing place and you deposit it into your bank account or whatever. Or if you're smarter, okay, get away from that crap, and you're gonna do a direct deposit into your checking account, okay? You can have a direct deposit into your checking account. Now, before you pay anything in cash, anything, let that money sit for just a second here, okay? And we are going to use what's called a line of credit, okay? You have unsecured, secured, credit cards, HELOC, line of credit, life insurance policy, equity, okay? These are all different types of simple interest debt weapons. That's weapons, okay? Now, the idea is you need to have some credit in order to get this, right? You need to build your credit. Denzel, how do I build my credit? Very simple. Let's look at your financials. What do you have? Do you have a credit card already? Okay, boom, we're gonna start with that, okay? Do you have good credit score already? Okay, cool, we're gonna apply. We're gonna find a local credit union in our area, Get our line of credit, get that thing going, bomb. Thank you. Oh, you have terrible credit? It sucks? Okay, cool. Check out a company called Credit My Rent, all right? And start reporting your rent payments to the credit bureaus. Boom, step one. Step two, get some information, get educated. Get you a secured credit card. Start building some credit, all right? It's very simple. How much are your expenses per month? Okay, out of all those expenses, what can I pay with credit? 500, 1,000, 2,000? Okay, cool. You go to a credit card company or your bank, get a secure credit card. This is for my people with terrible credit. Get you a secure credit card for however much your expenses are, or a little bit more, okay? Get that thing in place. Swipe the credit card, pay all your bills, wait 30 days to get the bill, pay yourself back, right? Your money's gonna be right there, right? You didn't use it. You had a credit card. You used the money first, the credit, and then 30 days went by, you paid yourself back. Okay, those are my people with bad credit. Now, for this particular scenario, for my gentleman here, my police officer, we do not have a line of credit yet. I understand. So we already spoke, we already got a plan going. We're going to be using some credit cards to build our credit between now and February. We're going to then apply for an unsecured line of credit. Okay, now the idea is I want to get him anywhere from like 10 to 15,000. Okay, now I want him to understand the system so that he is best prepared when we actually start. All right, and here's how it'll work. Let's say we have the line of credit. Doesn't matter the interest rate, doesn't matter the amount. Let's just say for right now, I have a line of credit. Okay, here are my steps. I have my one checking account that all my money's coming to, and I have the line of credit. Maybe it's with the same bank, maybe it's a different bank, whatever the case. I am going to first link the accounts, right? I gotta link the accounts, the line of credit with the checking account. How do you do that? Very simple. Most banks have a mobile app, and you can set it up right online. Okay, there's a little verification system. All right, if you're old school, you don't want to use the mobile app, make a phone call. If you're real old school, go to the bank, walk in there, tell them I need help. Okay, they might look at you with three heads and be like, sir, we have a mobile app, and you can just do it right from there. But you know, stubborn people. All right, but those are your options. All right, now I got the checking account, right? Normally got my bills going in there. I got this line of credit. Now I have to determine how much am I going to use of the bank's money to wipe out this particular debt, right? Or maybe another particular debt, all right? I determine it based off the amount that I get. So if I get a $10,000 or $15,000 or $20,000, I'm going to take 66% of what I have in credit limit. If that's too much based on the person's cash flow, I'll go off the person's cash flow. All right, for this scenario, he's got good cash flow, so I'm using the 66% number for him. We are going to extract, we're going to make a transfer out of this line of credit, okay, the chunk amount, okay, whether it's 5,000, 10,000, 15,000, whatever the number is. We're going to take out a certain amount, which I'm going to call the chunk. That money is getting transferred to the checking account, right? So it's going to go to the checking account, right? Now, I'm then going to pay my bills, okay? But not with this money, okay? That money is going to stay there. Money came out, a chunk, which is going to go to the checking account, which is going to pay the bill, which is the debt, the one specific debt that we're going to tackle, right? It's going to pay that particular debt, which is what? It's going to satisfy the month's payment. Okay, so if I'm paying off a mortgage and I chunk 10,000, 12,000 towards a 1656.87 payment using the bank's money, guess what? You satisfy the month's payment and then some, right? The principal. Okay? Now, check this out. You just created a debt over there and you've got a debt over here. This is where the confusion occurs. You're like, wait a minute, Denzel. I've got two debts in two locations. I'm paying interest in two locations now. Explain that, big guy. All right, cool. Ready? Ready? I took the chunk, took the money out, went to my checking account, paid the debt, satisfied that month's payment. Now I've got my income, right? I've got money on hand plus money I'm going to make within the month. Okay, whatever amount of money you have, this person has, I have, whatever it is, it's going to get deposited right into here immediately. Everything. This checking account, make it go to zero. Okay, everything, boom, goes right into here. Okay. Instantly. As soon as you get paid, that paycheck plus cash on hand, dump it into here. Guess what? You cut off any interest from accruing on this debt. Meaning you'll be saving interest here by moving your money to the line of credit. This line of credit, I want it to function just like this checking account, right? Your money is just going to sit in here temporarily, okay, to avoid interest from accruing. Now, at the same time, we just took money, the bank's money, out of here to pay this. What happened? I saved money on this interest. Yes? Did I not? If I make a 10,000 chunk or a 12,000 chunk, I'm gonna save quite a few thousands on interest. That is what I'm gonna call my cushion for the interest that will get charged over here. It'll be very, very little. Denzel, explain. How does the line of credit interest thing work? It's simple, calculated daily. Here's the formula. You take the balance amount owed, so whatever the chunk amount is, right? Not the credit limit, but whatever the amount you took out. Take that number. You times it by whatever the interest rate is on the line of credit. If it's 10%, 15, 9, 8, whatever it is. Then you divide that number that you get, right? The balance times the interest, divided by 365 days. That equals your daily interest costs. And almost all the time it's going to be around like $1, $2, $3, $4, $5. Minimal compared to the debt that we're actually paying. Okay? Now that you understand the interest calculation on the line of credit, if all your money is sitting in here, now your math just changed on the line of credit, on the chunk amount that you took out, right? You took out 10 and then you make $5,000 a month and you dump it in there. Okay, now you're only paying interest on $5,000. For how many days? However long the balance is outstanding for. Very simple. Okay, so you'll have these window periods like this. Okay, that's how it'll look like. Where one day the balance is at 5, then it's at 7, then it's at 5, okay, then it's at 9, then it's at 5, then it's at 7. Like it's gonna go Up, down, up, down, up, down, up, down. Okay? Till it goes all the way to 0. Then you take the next chunk and you do it again. You keep doing it again and again. Rinse and repeat. Okay? In the meantime, every time you make a chunk payment, you are buying time. Not only over here, right? But you're buying time to pay all your bills and to get paid so that you can keep dumping more and more money into the line of credit, right? So for this gentleman, what I have for him doing right now is some of the things that I wrote over here on this side of the board, right? Which is we want to pay off all our other debts first, like his small credit cards, the car loan, okay, other little amortized loans. Okay, we want to work on paying off those first so that we can what? Increase the cash flow. Okay, we're also going to be redirecting money back to us. What are some ways that we can redirect money? Well, let's look at the mortgage itself. Look, do I have to give money to the lender, the mortgage lender, to pay my property tax? Do I have to do that? Okay, same thing with the PMI and same thing with the county tax. That's $500 right there that I can be using to flow through my system here, right, to pay this off even faster, right? So if I can cut off the escrow fees on a monthly basis and pay them on my time using the bank's money, meanwhile I have that same money, right? All this crap, same money flowing through the line of credit, enabling me to make chunk payments faster towards specific debts. At the same time, all my income that I put in, would you agree we have to pay bills, right? And we have to pay expenses. Okay, cool. You're also going to extract money out of there to pay your bills, okay? By you dumping this income into the line of credit, you automatically what? You satisfy the month's payment. Yes? So I know some of you are thinking, well, damn, Denzel, as soon as I take money out of here, I'm going to start paying interest and I'm going to have a payment on that. No, you're not. Not if you're doing what I'm saying and dumping all your income in there. You're not going to have a payment. In fact, you're going to push out the due date even further along. It's going to get pushed out so many times because whether you get paid bi-weekly, once a month, weekly, commission base, okay, whatever it is, all that money is going to flow into the line of credit. It's going to sit there. You've already made your chunk. Denzel, how many times do I make a chunk payment? I like to do it every 6 months. I feel like that's like one of the fastest ways to do it instead of by the year. I've grown to learn that like every 6 months, every 4, every 5. Again, it depends on the cash flow and how fast we can zero out your chunk. So if your chunk is 12K, I want to make sure I've got the income and cash flow to bring that balance down to around 0 to give me the ability to take 12K out again and boom, throw it over here. Every time I make a chunk payment, I immediately save thousands on interest, right? Because that is the ultimate goal. How do I pay off my damn mortgage that I've got 29 years on? I'm 40 years old, 50 years old, 60 years old, 65 years old, 78 years old. You know who I'm talking to, right? You've been sending me some emails, right? It's time, mom, dad. let's go. Stop fooling around with me. Okay? Stop debating. Watch the content, make a decision, make a commitment, get an accountability partner. Let's get the kingdom going. Come on, man. Who am I talking to? Who am I talking to? Right? Did you know that you are a king? Did you know that God's reputation is online right now for your life? Right? Think about it. Apple makes products, right? What happens when their product goes bad, right? The phone has a malfunction, okay? What are they gonna do? Apple's gonna have what? A guarantee, a warranty for the product so that it can work successfully. That manufacturer, the owners, the manufacturer of Apple are gonna do everything in their power to make sure that the product runs successfully. Well, it works the same way with your life. Your manufacturer, okay, is trying to give you the tips, the strategies, okay? God himself tries to work through his people, okay, to establish, to restore your kingdom, okay? You have to realize how you've been designed, okay? You have a manual, okay? Read it, okay? Break down that word. Man, okay, is to make. It means to make by one's hand. Al is the maker's thoughts, is a thought. So it's Manuel is the maker's mind, maker's thoughts, okay? When you can grasp this, I'm talking to my older people right now, my moms and dads. Listen, if you can grasp this and realize that you must acquire your kingdom, you must restore what you lost, okay? You didn't lose heaven. Stop praying to go to heaven. You didn't lose that. You lost your kingdom authority here on earth. Therefore, you've been misinformed to what? Fall into a mess. Okay? And when you fall into the mess because you don't know who you are and how you've been designed, right? Guess what? You are going to get ruled by someone else inferior to you. That is the most dangerous thing you can allow in your household, in your family, is for someone else to rule over your life. Another human being. Why would you allow that? That is not okay, all right? So, coming back, let me bring it back in, right? Hopefully I hit some hearts right here. And I know some people are going to make some commitments very soon, right? And they're going to be like, listen, I'm ready to go. I had enough. I'm not going to pay 2.5 times towards my mortgage. I'm going to get this concept down. So let me bring it back once more. Simple interest needs time to accrue. So the longer I keep money in the line of credit, the longer it's going to take for the interest to accrue. On the other hand, amortized interest is compounded over time. The interest is front loaded in the very first couple of years, okay? So the goal is to tackle the principal as fast as possible using the bank's money to save interest on here, the debt that we're tackling, so that when I put my income in here, I pay nothing or very little in interest. At the same time, I'm able to extract the same money to make chunk payments, big chunk payments, in short periods of time, every 6 months, every 4, every 8, right? Whatever it is, to then use more of the line of credit right? So I took what, 10 to 12 initially, and I chunked at that mortgage. Bomb. I've got my money, my cash, right? I put it in the line of credit. I take the money right out to pay my bills, to pay my expenses. Naturally, you're gonna have less expenses than your income, right? That's where the cash flow space comes in, right? The cash flow stays in here, which will bring this balance down to zero. Your expenses come out, but here's what's interesting. If you made a chunk payment towards this debt, right, of this amount, okay, when you get paid, that $1,656 for that specific month, it's going to be right in here, right? You're not going to pay the bill twice in the same month. So that same money is going to stay right in here. And it's going to what? It's going to lower the balance even further. Okay? I hope you guys are getting this, man. Look, the line of credit is just a tool. It's just a tool. Get it. Understand it. Grasp this so that you and I can work together in paying off this mortgage in 5 to 7 years. You save all this money right here. Number one, you bring this money back over here into this equation, right? So Denzel, how do I, cut off escrow fees? Well, that's a simple phone call to the lender, right? And you make a request to voluntarily, you want to see first if your mortgage is voluntary or mandatory on the escrow account or whatever. If it's voluntary, request for that thing to be cut off. You don't need to have the money sit there and do nothing. I've been looking at mortgage statements. I'm like, damn, this person's got like 3-4 grand sitting in escrow doing nada. I could be having that work in my velocity banking to get the mortgage down, paid faster. And look, the faster this comes down, guess what? Now my mortgage insurance will become cheaper, less liability, right? Okay, cool. So look, I hope this is clear. Any questions? You know where to find me. Comment below. I got my information in the description. Okay, I got a lot of comments, people asking, hey, how do I get in contact with you? Yo, in the description. I've got my Patreon page where you can make a commitment. You can support this channel. You can give to the channel from your heart, okay? When you give, you shall receive. So that gives you access to work with me one-on-one, okay? I get a lot of people asking, how do I work with you? How can you run my scenario, right, on the board? Check out my Patreon page. We can talk from there. You want to send me an email? I've got my information below. You can send me an email. You can ask me questions. I'm going to let you know, hey, this is what I can do. This is how I can serve you. This is how we can work together. All right? Now, I do my own giving, okay? People who've been following me for quite some time now, you know the first 104 people that reached out to me are being served, whether they give or not. That's from my heart. That's part of my kingdom authority and leadership here on earth. That's part of my system. I've already breached that first 104 people. I'm well around almost 300 people now, okay? Those people, in order for me to serve you, you got to make a commitment. Do you want to work with me as your accountability partner? Make a decision. Let's go. I see the numbers. There's a reason why I have you fill out the form. So I can see your numbers. I'm qualifying you, right? I'm seeing, okay, is this a mom? Is she serious, right? Or is this a man playing games, right? Because I love working with my moms, right? So I put my moms in a category, right? For my moms making like $2,000, $3,000 or less, okay? They're going to get served. They know it. They know I'm going to serve you. You're making 5, 6 grand, 7 grand, 8, 10 grand. Come on, don't play with me. Don't play with me. Make a decision. Let's go. Let's work together. It's a little aggressive today, but I just got this fire burning inside me. I'm like, man, I can't let these people fall. right? You know, I keep asking God, man, how do I keep serving more and more people, right? I can only do it with your support, and I want to thank all those committed people on this channel, all my patrons, my family, my friends as well, supporting me financially, spiritually, mentally, just pouring into my life. And here's how I pour it all back out. So I hope you grasped it. My name is Denzel. For all my new viewers, welcome. I love you very much. Have a wonderful day, and God bless.